So the wealth can be created only long term. Now there has to be a structured way. You buy today and sell tomorrow, that is not going to help anyone. So you've missed out on that multi-bagger. You need to focus on the research report which our analyst gives out, and you need to read them. You need to understand what are the future prospect of a company.
Yes.
Build a portfolio with discipline, with patience, have your risk management right. So the research center is one place where you get everything, and we are trying to bridge the gap. Now, what we are giving in research center is fundamentals, technicals, derivatives, macros, and we are also going to start with some world macros as well.
Hello and welcome to another podcast. Well, my name is Kshitj Anand, and let's look back at the retail participation. In fact, it has transformed from the past few years. Rise in demat accounts has actually led to increase in market participation. And one thing usually comes up in research or in search that usually retail participations are doing is finding the right multi-bagger or finding the next wealth creator, you could say that. But is that simple? Uh, the answer is yes and no. Why we say that is because multi-baggers look good in hindsight. But is there a process that you can actually do right now to find the next multi-bagger of tomorrow? Well, the process is yes, and definitely it's following the right approach to finding the right stock that could turn to be the next wealth creator. And to discuss more, we have with us Somil Mehta, who is head research center retail segment at Mirae Asset Sharekhan. Welcome to the podcast, Somil.
Thank you so much for this opportunity, and it is great to be on your podcast. I hope this conversation gives a lot of clarity to our retail participants and give them more insights to what research center is.
Sure.
And give them more ideas to how to build wealth.
Absolutely. Uh, Somil, let's start with the fact that yes, retail participation has definitely increased. More so after COVID, you could say that because of the rise in DIY investing. But has the research also evolved in the same pace over that period of time? What are your views on that?
Yes, definitely. The participation has gone over the roof in the last 5 years,
Sure.
after the COVID. And in the last 5 years, I think the numbers are 21 crore demat accounts in the last 5 years, which is really very good for the economy.
Sure.
As the participants are getting more aware of wealth building and research and more avenues of investment ideas.
I guess, yes.
Now, I think from here, about research has not evolved that much.
Okay.
If you see overall
Mhm.
versus the participation, because what I have seen in last 5 years is that people are going to social media and taking tips and information from them.
Right.
But that's not how it works. It should be more discipline based.
Okay.
That's how I see it.
Right.
The discipline should be about your position sizing. How much can you take the risk? What kind of age bracket you are? Where you want to reach at a certain age? These are the parameters which you really need to understand, and then take these research ideas into account.
Right. No, absolutely. And in fact, uh, like you really said, that research is something which is available now at every other platform. Right. And I think it's more to do with the fact that how easily that is accessible. And but there's no structured process on how these investors are able to act on research calls. Right. So, are there any mistakes you foresee when you talk to the client that, while they are fine, they might have some information as to there is a research call, but I'm sure in the process when they're actually implementing or executing those calls, are those mistakes, is there any mistakes that investors should be aware of that they are making, they might not be making because they might not be aware of?
Yes. There is one mistake which everybody does.
Okay.
Which I have seen very in the last probably a decade.
Hmm.
That mistake is basically people take these research ideas at one time ideas.
Okay.
They need to uh, be convinced about that idea.
Hmm.
They need to read the research reports.
Sure.
They have to build a risk management system for themselves.
Hmm.
It could be a simple one. I don't see anybody building a very complex institutional level or a
Yeah.
algo level risk management system, but it has to have a simple risk management system.
Sure.
And where these investors can invest into right ideas in a systematic way. You cannot have all your eggs in the one basket.
Exactly.
So you'll have to have gold, you'll have to have equity, you'll have to have a little bit of bonds, you'll have to have a little bit of FDs as well.
Right.
People say that FDs are not useful, but FDs are real, it is liquid
Liquid. Yes.
and it gives you peace of mind.
Hmm.
So this is how I see it, and that is one mistake which I see that investors make, that they just take these ideas for one time and then they leave it.
No, no, absolutely. Well, tell us something. When you hit the buy recommendation, or when there's a report, as in there is a buy recommendation on the stock, how should investors read that? Is that price sensitive? It is time sensitive, or it's consensus driven? How should one read? Because usually what happens is that probably one brokerage house might have given a buy. There might be another brokerage house which has a different view altogether.
Absolutely. That's why we have research center now, and the research center itself gives you the entire idea and structure, the way you want to build your wealth.
Okay.
In fact, even trading as well. If you
Hmm.
want to trade, it has to be structured. It has to be more disciplined.
Sure.
Um, Now, the way investors should look at it, uh, if that's the question, then there is short term,
Right.
there is medium term, and there is long term.
Yes.
If you're talking about short term, that is definitely trading,
Hmm.
right? So trading has to have a very, very strict discipline, a strict risk management, as we said,
Hmm.
very strict risk management.
Hmm.
Your position sizing, your loss taking abilities,
Hmm.
your stop loss targets, and all of that.
Exactly. Huh.
All of that needs to be on your spreadsheet. Needs to be monitored very frequently.
Hmm.
So that is short term.
Yeah.
Now let's go to medium term. Now medium term is a positional views and positional trading.
Right.
If I may say that. So positional trading is basically for more than 3 months,
Okay.
maybe a little more.
Hmm.
But those positional ideas are basically for 10 to 15% upside or downside. It could be, if you're
Exactly.
trading, that could be short or it could be long,
Right.
both sides. So if it is long, let's say for example it is long, then even that requires discipline.
Sure.
The position sizing and stop loss and targets and all of that. Now let's go to long term, where you really make your wealth,
Yes.
right? That requires patience as well.
Right.
That requires a lot of discipline. Um, you need to focus on the research report which our analyst
Hmm.
gives out, and you need to read them. You need to understand what are the future prospect of a company.
Yes.
What are they doing? In the given scenario,
Yeah.
there is a lot of test, right, for a lot of
Absolutely.
companies.
Absolutely.
So you need to understand the scenario as well. So long-term investing will definitely build wealth for you,
Sure.
and this is how we should look at. And research center will definitely give you those short-term, medium-term, and long-term ideas in one platform.
Okay. No, absolutely. And I think there's one word which you mentioned, and that is actionable research. So, what actionable research really means, if you can help simplify the term for investors.
Actionable insight, basically actionable ideas means, can you action on that idea?
Okay.
It cannot just be information,
Right.
right? Actionable ideas means,
Hmm.
what is the company doing, right? What are the future prospects? What are the targets? What are the upside targets?
Okay.
What can go wrong? All of that needs to be there on the research report, and the investors are supposed to read that and need to read that. Uh, we write it on the report. We give them a very concise, summarized report. It's not like institutional reports like 40, 50 pages.
Right.
For retail research, we give, concise, summarized report for 3 or 4 pages. Should read them and then act on them.
Absolutely. And how has this format evolved over a period of time? Like you rightly pointed out that for institutions, the format is slightly lengthier, but for retail investors, I think more compact. Is that how it has evolved over a period of time, so that it can be consumed in a manner which is more preferred from that part of the system, I could say.
Absolutely, absolutely. I mean, if you see institutional level research reports,
No.
there are all 50, 60, probably more that kind of length, but that is required for institutional research and institutional participants, because they want to know each and every detail of it.
Right.
But if you compare that with retail, retail requires a very summarized report.
Yeah.
They don't need to go into extreme details. And if you have that summarized report ready, if you have the key points, the key charts, which gives you the visualized idea of what could happen or what could go wrong as well,
Yeah,
right?
absolutely.
Things can go wrong as well. So if you give them that idea, the retail participants will have better control over what they are doing at this point of time.
Right.
So yes, retail research, the content consumption is very important, and that content has to be a little smaller. It
Right.
cannot be too huge. So these videos of 2, 3 minutes, 5 minutes,
Yes.
those also work really well, and we do that in research report as well, research center as well.
Oh, absolutely. Because I think I wanted to ask you, the demand for bite-sized research has also, amplified over the past few years, and uh, thanks to the Gen Z population or Gen Z investors, which has come recently into the market participation, you could say that, and a lot of video explainers are also a very sought after thing to watch out for. And this is something which is really gone off the roof, in the sense that the
Yes.
demand for that.
Correct.
And a lot of news, a lot of, in fact, the research point of view is getting consumed by that manner. So this is also something which you're facilitating in as part of the research center process.
Yes, absolutely, absolutely. So, what we have done is we've started making videos on our reports.
Okay.
Uh, we are not making videos for all the reports, but we are making reports for sectors, sector view quarterly. We are making videos for our market outlook for the entire year, for the budget, for Diwali as well. So we make these small, small videos.
Okay.
Those videos could be from 2 minutes to 7 minutes, 8 minutes.
Okay.
But that kind of length is now required for today's generation. As you said, like rightly said, Gen Zs require that kind of content
Right.
to understand what is happening. One example I'll give you. I do this a weekly video.
Okay.
I give an update on markets,
Sure.
on Nifty, Bank
Oh.
Nifty, the levels,
Uh-huh.
what the targets are, and all of that. This gives a participant, a short-term participant,
Huh.
to analyze or understand what a research center or a research level analyst are doing and what they are thinking. So these kind of things really help.
No, no, absolutely. And in fact, while going through the research, I'm sure a lot of investors would have one thing in mind, and they are actually watching the video for one thing, finding the next wealth creator or finding the next multi-bagger.
Yes,
I
absolutely.
am proud.
Everybody wants to.
This is something. Acha, okay, if I'm scrolling this video, I think what I want the information is, how can I create, or how I can build wealth, or is there a stock that can actually double from here or triple from here, or and would that be a short term or a long term core? So, but is there a structured process to this, Somil?
So the wealth can be created only long term.
Okay.
Now there has to be a structured way. Um, there is no multi-bagger concept. Yes, you invest in a good company today, and if you think that this company is going to be very good in future and has a lot of potential in future, you hold on to it for some time. And when you hold on to it, that is your discipline, that is your patience.
Exactly.
Again, so when you hold on to it, then you make that money.
Sure.
Multi-baggers, let's say for example, today you invested, I told you that you invested in XYZ company, right? And I'm telling you that this company is going to be really very good in next 10 years.
Right.
But you buy today and sell tomorrow, that is not going to help anyone.
Exactly.
So you've missed out on that multi-bagger.
Uh-huh.
Right? So there has to be a discipline, there has to be patience. You need to understand the scenario, the future prospects of the company, and then wait for it.
Absolutely. And that's the right methodology to go by. And how important is transparency in the research reports that you publish out?
It is the most important part. If you are not transparent, I think the trust and that credibility is never going to be built, because at this point of time the information is very freely available, and if you're not transparent,
Right.
then you will never be able to gain that trust from the transparency is definitely very important.
Absolutely. Let's also talk a little bit on the research center bit. I hope this also sort of plugs the gap that we've discussed in our conversation. The research center. How do you want to sum it up?
So the research center is one place where you get everything, and we are trying to bridge the gap which we have already spoken about. Sure. Now, what we are giving in research center is fundamentals, technicals, derivatives,
Okay.
macros,
Yeah.
and we are also going to start with some world macros as well.
Okay.
So these are some very important parts of the market, and the participants who are watching these videos or reading these reports will get everything in one place. So yes, so basically traders, investors, everybody will get the research report which are institutional level, high quality research reports in one place.
Absolutely. And who are the investors who are likely to benefit from this?
So, as I said, retail, we have a retail segment, we have institutional segment, both on research center. And now I'm heading the retail side.
Okay.
And retail side participants will get everything about equities, commodities, ETFs, commodities. You'll get all the reports for gold, silver, and other commodities. Now, in equities, you'll have reports on markets, Nifty, Bank Nifty. You'll have reports on stocks as well. You'll have reports on baskets, small baskets, which we have about the stocks as. So these are the initiatives we have taken.
Right.
If you want to build a portfolio, you can go to fundamentals. Fundamental side of it, you can look at our coverage reports and act on them. There are different sector reports.
Right.
There are a lot of stocks, very specific stock reports as well, which you can choose from different sectors and you can invest them now.
Absolutely. And if some of the investors want to sort of understand how the process works, is there any grace period or a free time period that investors can avail at this point in time to try out the research center?
Absolutely. So there are 15-day trial period.
Okay.
Once you so we want investors, these participants, to go in and see the quality of the reports and the videos we make.
Sure.
And then go for the full-fledged participation
Right.
and involvement with a research center.
Right.
There is a lot of support from our broking side as well, our customer service side as well. So please feel free to.
No, no, absolutely. And so, do you think that you set one standard for research reports, and this is the, you could say, the OG of research reports that investors can have? Do you see that this is a trend which would only evolve from here?
Absolutely. There is a lot to do. There is a lot to be done. People will be following this trend. I'm very sure. Because if a participant is getting everything in one place,
Right.
short term, medium term, long term, fundamentals, technicals, derivatives, macros, everything one place,
Right.
then I think there is nothing like it. It's the best place for a retail investor. Institutional investors anyways get the research reports from the institutional level, analyst and the segments.
Right.
But retail participants are not yet very, aware of these things,
Sure.
and that's the reason we want to reach out to everyone and see how they can build wealth from our ideas.
Absolutely. So, well, let me ask you one another, you could say problem, or, it's a concern, or you could say it's a habit of investors, right? Because a lot of investors when they have a stock in the portfolio, they are stuck to that stock. I know for some reason or the other. Is it the attachment that they have? Is it the next baby that they've, have there in their demat account? So, how do you deal with this kind of scenarios? I'm sure there are a lot of queries that do come to you, and investors just don't want to let that go from their demat account if it's a loss-making company, or if the prospects are not there, and if they've already read the research center report, but it just says something, but they just fail to act on it.
Absolutely. I mean, I totally get your point. People don't let go to their emotions.
Right.
They don't. They are not. They are attached to it now
Huh.
because they have invested.
Yeah.
And they are happily invested. Now, when they read a research report, they are convinced that the future prospects of the company are really good.
Hmm.
This is the story, and I can get a multi-bagger out of this idea. Now, the thing is that these research reports are not one-time research report.
Yes.
These research reports have updates.
Yeah.
Every time, let's say, for example, an XYZ company, today I think that the company will go up by 20%.
Yeah.
And we have released a report.
Hmm. Hmm.
Uh, Tomorrow, let's say, if in just in case if it does not work,
Yeah.
and the company starts, bleeding.
Right.
Now, we will also put a update
Update. Yes.
that there are these changes happened
Right.
in this company,
Yeah.
and the scenario has changed because of these reasons,
Right.
and now we have this view on the on the stock.
Exactly.
So
Yes.
then you'll have to read, you have to be very, as I said, disciplined, that you'll have to keep reading, and you'll have to keep monitoring on these ideas and these research reports which you are, going through, and where you have happily invested.
Right.
I think reading reports should be quarterly.
Yes.
You don't need to read every day.
Yeah.
For an investor. For short-term traders, probably every day. But for investors, quarterly, you need to for sure go in, get the report, the latest report, and see what we are writing there.
Yes.
So that's one discipline we need to have.
Absolutely. In fact, you did bring out a very valid point, and a lot of investors, they've acted on one research report, but they don't follow up on the update that you've given
Correct.
from the research center. So that's very important, and for long term investing per se. Because if you invested in one thing and you forget, I think those days are gone when pick one stock, and yeah, and then after 20 years or 18 or 20 years, things look.
You have multi-bagger.
Yeah.
No, no. So you have to choose right. You have to choose right, and that's why we are here. We choose the correct stocks,
Right.
and even if, let's say, for example, we are not we've not done a right research. Probably, I'm just saying.
No, but things are also evolving now, by the day. Things
Yes,
are also evolving.
correct.
I mean, we've recently, seen the period of trade wars or any other,
Correct.
things, situations keep evolving, and that also impacts the business.
Business as well. Yes, absolutely, and that's where things go a little wrong,
Hmm.
and we should make sure that we read these updates. And once we read these updates, you get to know the scenario. And if your stock is down, I don't believe in averaging. As you said, I don't believe in averaging at all in your losing ideas. When you're losing, don't average out.
Right.
Read reports. Read what is happening with the company. What is the scenario?
Sure.
Where it is getting impacted, and then act on it. But if you're losing on something, don't average out.
Okay. Also, tell me something. The standard format for a research report that comes out, is it the 6-month, 9-month, or 12-month period? How is the format?
See, for short term, it is a week probably.
Okay.
A week
For
or
the technicals.
for the technicals and
Okay.
derivatives.
Right.
It would be 1 week or probably a month max.
Sure.
Right. For fundamentals, if you see fundamentals, it is 1 year.
Okay.
So it is long term.
So
You
12
have
months.
to, if you are investing in a fundamental researched stock, then you have to make sure that you are there for 1 year. And these discipline only make money for you. So if you are there for 1 year and then see how much that company is making, and in 1 year we have big companies in our coverage. We have mid cap companies as well in our coverage. So you will be surprised when you see after 1 year that how these companies perform and
Yeah.
what kind of returns actually we can get.
Right. In fact, let me also ask you one thing, because you did mention about position sizing in the conversation. All right. And let me, pick your brains on that, is because that's very important for any investor. I mean, for institution, definitely, but even for a investor, how should they go about position sizing when they're constructing the portfolio? How research center can help them to do that?
Position sizing, we do not construct a trading portfolio, or a fundamental long-term portfolio structure risk management for anyone.
Okay.
We definitely give ideas, we give recommendations, but as you rightly said, that risk management is the most important part.
Yes.
Position sizing is one of the most important part in there. Now, position sizing, if I have to give an example, let's say, for example, you have 1 lakh rupees in your pocket and you want to start investing with 1 lakh rupees. Now, first thing you have to do is that keep at least 20%, a minimum of 20% on the side.
On the side.
And you don't touch that at all. For the worst case scenarios, you keep that 20%.
Yeah.
Now you have 80,000 rupees. Now, in 80,000 rupees, I would say that at least a 20%, let's say 20,000 more, you keep for those stop losses, or you keep for those drawdowns and all that. Now you have 60,000 rupees. Now 60,000 rupees, you can go with equal amount for 6 different ideas.
Okay.
And once you have these 6 different ideas in your portfolio, you track it.
Right.
Right. If you lose a little bit of money there, then you take those 20,000 rupees which you have kept for stop losses and your drawdowns. You again invest there in probably in a different idea.
Okay.
But not in the same idea.
Right.
Because you're losing. And as I said, that losing ideas, you do not average out on your losing ideas. And now these 6 ideas you definitely track for some time. If you're trading short term, probably every week you need to track them. If you're investing for long term, then you keep tracking for at least quarterly.
Sure.
So this is where you should do, and equal amount should be invested. You do not invest 20,000 in one stock. You do not invest in 10,000 in one stock.
Exactly.
And 5,000 in another stock. Don't do that. Equal amount for all your 6 ideas, and you're good to go.
It's like that approach, core and satellite approach, something like that.
Absolutely. So, if you say your core has to be your 40,000 which you have for your base, and your satellite that can keep moving,
Yeah.
and that would be your 60,000 rupees. If you are a medium term, let's say you are a medium term investor in your trading positional, then once you hit a stop loss,
Yeah.
you take out money from there, you exit from that idea, you enter into another idea, but the same amount. But that money which you've lost, you have to get from your core
Yes.
and invest again. And that's how this discipline will take you to the next level. But yeah, do not expect wonders. Do not expect wonders.
Right.
Discipline and patience will slowly build wealth for you.
Absolutely. And rightly pointed out there, Somil, that one thing that will work is the process and not something, not another thought or not another idea that you saw in any of the social media platforms per se, or any other view that you have on the market. So, yes, follow the report, follow the research, follow the process, maintain discipline. I think these are the only things which will take you to the next wealth creator, or at least have that wealth creator in your account before it become a consensus idea.
Yes, yes, yes. I mean, discipline, we are giving ideas,
Yes.
but for a participant, you have much more to do actually. So you need to have your discipline, you need to have your systems ready,
Yeah.
your risk management ready,
Sure.
and you need to keep updating yourself
Right.
with the ideas you invested in.
Sure.
So yes, these are the things you have to have in your day to day thing.
Absolutely. Also, I'll ask you one more thing, and that is, uh, so we have a buy consensus, okay, but when does a sell consensus comes in? So what are the things, or what are the trigger points you could say that which could trigger, okay, now from now onward, I think it's more, let's reduce the position, or let's ask the investors to probably weigh down their invested capital from the stock.
Okay, so when we initiate a buy call on a company, we are definitely very confident that the numbers are very good.
Right.
The balance sheet is very good.
Uh,
The future prospects are very good. The product the company is selling is very good. The quality is very good. Now, when we update to sell
Hmm.
or exit,
Right.
right? If the quality of a product
Hmm.
is not good, it has deteriorated,
Okay.
or let's say for example some outside source or a control has made the company a little weaker.
Okay.
When do we start giving sell signals, or when do we start giving exit signals for a stock where we have written a report for a long
Okay.
term? uh, if the product is uh, is not good now, it has deteriorated, or the numbers have started, 2 or 3 quarters, the numbers have not has been,
The earnings have not really
yeah, so
picked
the
up.
numbers are going down,
Hmm.
or it has weak performance overall in their distribution.
Right.
A lot of factors matters, but all of that
Hmm.
has been, updated on our research report. You will be able to get it, but yes, we definitely update.
Ah,
That is one thing which is most important part.
right.
Every quarter, read the report,
Ah,
and you'll get those ideas.
ideas. Yes. I think that's very important because once an investor keeps following the pattern of the report and what they need to do next to make sure that the wealth creation process keeps building, right? Because if there is a deviation in the thought process, definitely it will get updated in the report, and that's when investors can duly take note of that and take appropriate actions accordingly in their portfolios. I'll add one more thing to it. How important is management quality? What are the kind of weightage
Yes.
that you give to management quality
Yeah,
in your
definitely.
report?
The most important part,
Uh,
because the leadership is the most important part.
okay.
I'll give you an example. I'm always very inspired by the Tata Group, Ratan Tata, Sir ji. Uh, he's been a role model, and he's built an empire. So that kind of leadership is very important.
Yes.
And if you don't have that kind of leadership or the management, you are not able to build the future.
Huh.
They are building the future.
Exactly.
They are not building just a company. They are building future for themselves, for the country, for the investors. So yes, a management is the most important part.
Absolutely. And as we prosper, and India, from a macro point of view, and we plan to become the third largest economy, lot of companies are now getting listed, and from different genres. You could say that a lot of automation, a lot of AI, new age businesses are coming in. Uh, how is the is a valuation methodology is also changing by that time? Each business that comes in. A new experience for you guys as well. Okay, how to evaluate this business now?
Yeah, exactly. So there are different methods. Of course, there are different methods to evaluate what the valuation is going to be.
Sure.
And we've very recently seen a lot of companies coming out with a lot of very high valuations, but even that valuations are being respected in the market. And that's absolutely fine, because if you see the company growing in the future, and if you see that company reaching those levels,
Yeah.
and if you have that kind of reach
Right.
outside, probably in India, probably outside as well.
Yeah.
If you have that reach, then yes, it is very much fine to
Right.
have that kind of valuations. And yes,
Yeah.
new age businesses are having a very different kind of evaluations, and we have our ways to evaluate that.
Absolutely. So if you look at the year 2025, Somil, so we see a lot of companies getting listed. I'll just pick up from the point where you left off. So more than 300 companies on the IPO front, main board plus SME. So more SME companies are coming in. I'm sure the search centers does not really follow the SME part of it, but more the main board part of it. So how are you looking at the kind of activity that we are seeing in the primary market front? Good, bad, ugly. Both, everything is there.
See, IPO markets are doing very good. The only reason is that the markets are doing good.
Uh-huh.
The economy is doing good,
Yes.
and the businesses are doing good. That's why the IPO markets have picked up.
Yes.
A lot of companies, new age companies, have come in, and they have done really well. And I think we have to look at it in a positive way.
Yeah.
And these are good things happening
Right.
for the market, for the investors, because they have more more companies to look at,
Right.
right, and new ideas to look at.
Sure.
I'm not saying that the old ideas are now vanishing. I'm not saying that. They're very good. The large cap companies like L&T and Reliance and Tata groups and all of that, they are doing really well. But the new age companies are giving more options. They are giving you more well building ideas,
Yes.
probably multi-baggers. So yes, I would be very positive on these new age companies, and IPOs need to be looked at in a with a different lens, on a positive side.
Okay. Also, one more thing, in case somebody is a very conservative investor, not very active, uh, so is there a way in the research center that they can make a portfolio which is more conservative in nature and not very risky in that sense?
Yes, absolutely. I mean,
Now, more dividend paying stocks are there in the portfolio
yes.
from that perspective.
So we do have research reports on these kind of stocks,
Okay.
where you have high dividend paying stocks, and these companies are very stable, or growth is very good, but they are at a very high valuation, or probably they are big, huge
Right.
companies.
Absolutely.
Now they are risk free, kind of. I wouldn't say absolutely risk free.
Huh.
There is always a risk.
Exactly.
But these companies, we have research reports, and you can definitely go through them. You can build a portfolio with these companies, but you'll have to go to top 50 companies if you want to, have a risk-free portfolio, and then see which companies are giving you a good dividends from there.
Yeah. Absolutely. And any final advice to investors?
Build a portfolio with discipline, with patience. Have your risk management right. Don't overdo things. Keep reading research report from research center.
Absolutely. Well, on that note, thank you so much for taking the time out, Somil, for this podcast. And yes, for investors, if you are hunting for that next wealth creator, I think follow the discipline, follow the research reports. I think that will take you there. Thank you so much for taking the time out, Somil.
Thank you so much for inviting me and giving me this opportunity. Thank you.